Hello, everyone, Prospero.Ai users. Welcome back to our live stream. George is going to be joining us in a moment. Hopefully, people filter in here to see your co host, Stephen, alone. George should be in here any minute. As people trickle in, watching on YouTube, and we are now simulcasting on X or Twitter. I hope you got out the email we sent out with the topics. Let me know if you guys get our emails where we email everyone the topics in advance. We also posted them on Twitter today, which I'll try to. Let me post the Twitter. Let me post our Twitter post in the comments so you guys can see the topics in advance if you're interested in reading what we have in store for today. I'm going to be pulling them up right now and posting them for you guys. But comment right now if you're signed up to get our alerts through email. We're trying to be more organized with the live streams, and because we know people have enjoyed them, so we're trying to see what's working. All right, I have the tweet right here. Let's see. Okay, here's a link to the tweet. There you go. So that's a link to all of our topics, but I'll just run through them now as you guys can click on that tweet. If you're not following us on Twitter, follow us right now. We post a lot of the information that we post in the newsletters and the stuff we post on Substack in a more easy to understand, simpler way on Twitter for those that like their content in that form. But we have some big news stories in the sports world today. Everybody knows probably, that's in America at least, the NFL is the biggest league in the world. We've got the Super Bowl coming up. There's a crazy stat about Brock Purdy's contract. Stick around for that because it's really interesting what's going on with college sports versus professional sports. We have a company listing on the NYSE today that also is around the sports world. It's a gambling company. Comment any guesses right now. No cheaters. Don't click on our topics on Twitter. Comment your guesses for which company is going getting listed on the NYSE. Here's a hint. They're already listed on the London Stock Exchange, and they're a gambling company. So guesses in the comments. Let's see. Is anybody going to guess? Good guess, GM. You are correct, sir.
Oh,
George has joined us.
sorry, I'm a little late. This is the last day. Hopefully my my living situation gets a little more stabilized soon, and I'm not running all around to different locations to work and live and such. But thank you for your patience. Thanks for being here. Hopefully, Stephen was a good uh, ambassador on the topics. Um, and yeah, like let's dive right in. A lot of interesting stuff to go through.
Made you full screen. Yeah, we got a lot of good topics today. You know, this is a big week in the stock market with, I believe I saw 20% of, the market cap of stocks reporting this week. So it's going to be probably fireworks either way. We also have a Fed meeting, which we'll get into later. But yeah, there's a lot happening. Do you want to give us your market update? I know I read your newsletter yesterday, and it seemed like, last week I set up the stream how the market was hitting all-time highs, and you said, well, slow down. There's a lot of underlying stuff that doesn't look too good. And it seemed like we saw you kind of elaborate on that more and how you're seeing a lot of stuff underneath the market that doesn't really paint a great picture, even though we're at all-time highs.
Yeah, no, I mean, I think that's 100% right. And like what I'm doing and what I suggested in my newsletter is actually just like I think given like all of like the volatility that not only that we've seen, but I kind of said I expected from the beginning of the year. I think the approach that I'm using is the approach that I would really advocate for anyone to use, which is that you start off the week pretty neutral as much as possible. Get your Friday positions neutralized. Um, and when I say neutralized, it means close to long short, or like if if you're just straight long, you can do like the SQQQ hedge that we suggest in our paid newsletter. But anything to just make sure you're not only exposed to the long side as these weeks open up and as these major news events come through, like the Fed meeting, is really going to go a long way um, in that ensuring that you don't take too big of a hit on any given day. And like that's the big thing about hedging. And like we can anyone that has like complex like talks about the complexities, like obviously hedging can get very, very complicated. It could be very simple, but it just basically means you're not exposing yourself to just one side, whether it be long or short. And obviously a lot more of you are kind of exposed straight long. And we can always answer questions about like reasonable ways to build those skills. And I actually have a ton of conversations going right now in terms of just like slowly exposing yourself to one or two shorts, or different things along those lines. Um, but yes, I think that the big thing is going into these weeks, going into major events, like just neutralize yourself as much as possible in terms of bull bear. To that's a good general practice, but especially in in a market that pretty much anyone will say is volatile. Anyone in the know that they're just like, yeah, like could be bull, could be bear, but no matter which way people are going, it's pretty universal that this is going to be an up and down year. So in an up and down year, you got to sharpen your abilities to not be too exposed on one side or the other.
Yeah, so as we roll into our topics for today, because there's a lot of news stories going on in the market, I see we got some viewers. So let me know if you're a new viewer. And if you are, feel free to comment any topics or stories that you would like to hear our opinions on, because we like to have an interactive stream. So we have some predetermined topics, but if you have anything at all, don't feel shy. Just feel free to comment. With that being said, there was a company that got listed on the NYSE today, which I asked the chat before to try and guess, and we got a correct one from GM. It's Flutter, which is the parent company for FanDuel, which is actually the biggest gambling company by market share in the USA. They had 51%, I saw today, of the market. So the gambling sector is a hot one. You have the likes of DraftKings and all the legacy, casinos and entering the market as well. So, what do you make of the gambling sector? This is a story that's kind of going on. How we're coming into the, probably gambling peak of the year with the Super Bowl coming up. But beyond that, in general, just the gambling space.
I mean, it's huge. Like that's the thing. It's just like if there's one thing that like learning about the stock market, about the stock market has taught me, uh, it's that you know gambling like people have this big gambling instinct, and it's very ingrained in us. And like I would say, like especially in realistically in like a society that is getting harder and harder for people um, to feel good about their lives as they see like the rich getting richer and like their station like sometimes staying the same, sometimes even getting worse, especially in terms of like you know the tax cuts for the wealthy and like tax evasion bills that we've talked about here. It's hard for people. So people want to be lifted out of their lives with different kinds of excitement. And gambling, even like I would say some of the riskier meme stock stuff, um is like a way to get some excitement into people's lives. And so like yeah, I think these are big businesses. I think it's kind of hard to know who's the winner, who to bet on, especially when there's people like ESPN entering the fold and they're going to push their gambling site, and like Yahoo, and there's an MGM. There's a lot of players, which makes it a little risky. But I would say in terms of like a sector, if you have some, and we always talk about this as like good value investing principles, where it's just like if you work in the sector, like I don't know if it's like the casino or the sports industry, and you have some what you feel is a unique view or a unique perspective on who is going to win the gambling wars, that could be a huge opportunity for you to capitalize on that information. Or even if you're just like, I think it's really going to be one of these two, narrowing it down to FanDuel and DraftKings, or the ESPN, like betting on MGM because you think MGM is going to be the major beneficiary. Like anytime you can even narrow something down to that much, it's a great strategy. But as we always say with anything in terms of like a value approach, you also have to be realistic about like, do you have some angle? Do you have some information that other people don't? And that's always like kind of an important gut check for anyone to be a good investor.
And so before I have a interesting stat I want to share about Brock Purdy, but we got some comments, so we'll get to them quickly because they're both about the same thing, basically. Hello, Flitch. Happy to see you're new here. They're commenting about semiconductors, and then Jonathan is also asking about SMCI earnings today. So you want to go over your semi view and SMCI more specifically?
Well, I think there's a lot of different things, right? There's semis, and then there's like AI optimized semis, which I would say is pretty like, if you're talking about two companies that have distinguished themselves that we talk about all the times, we talk about Nvidia, very distinguished in AI. I would say SMCI pretty distinguished in that area too. ASML, is another one that I kind of is like the third one that we mentioned that we really like. Um, but yeah, it's like there's semis and semi exposure where it's like I think a really good way to think about it is like AMD versus Nvidia. And AMD's bread and butter was much more um you know, CPUs, right? Which are different than GPUs. CPUs are more the like the motherboard, the basic, processing that like, I would say a lot of older algorithms are in RAM. Newer algorithms are obviously GPU heavy. For those that don't really know what NVIDIA's value proposition is, it's actually software embedded in the hardware that helps optimize what's called low level programming. And SMCI is actually starting to do that more on like a package all in one kind of like server versus just chips. And NVIDIA does that too. But that is just one thing I want to talk about in terms of an important distinction why people are so bullish on SMCI. Because as we said, we can give a live look, but we've been pounding the table on that and looked very, very smart on that. Obviously, a big thing carrying our portfolio this year. But I want to get you a live look at SMCI's like the thing that we really is just like holy shit on the 2026 PE. Um, why are they not giving me this? Um, Currently not available. Wow, SMCI, they're blocking me out. But last we saw it was a 0.24 PE ratio for 2026 earnings, which is nuts considering Nvidia is about a 26 for their 2026 earnings. And by the way, they're the most similar companies to each other. I'm not saying SMCI is anywhere near as developed, but that's kind of why it has the more exciting upside because it is trading at a 0.24 2026 PE. And that's the thing where it's just like at the 2026 earnings side, like what is crazy about that is that that is a 90x discount that uh, SMCI is trading at to Nvidia. Now we're going to talk about like actually one of the hardest things, and I will struggle about this right until close today because, as I said, it's one of the hardest things. Um, SMCI guided up on their earnings last I believe it was Wednesday right before we added it, right? It went up a lot on that, obviously very good. Now we're in a situation where, by the way, if anybody tells you they have answers to this, you shouldn't trust them because nobody has answers to this. Like even the smartest Wall Street people struggle with this, and I'll tell you why in a second when I just explain the problem. It is very hard to know if how much of that extra value that SMCI is going to announce is built in, right? They could like the easy like thing to say the stock will go up like in a vacuum and all this stuff is going to be in a vacuum because it's very, very hard. Is that like right now they guided to certain profits and revenue, right? If they beat those, even from their like guidance update last week, the stock is likely to go up with the caveat um, of depends on their guidance, depends on what other people are guiding, like their guidance for 2024, 2025, 2026, etc. Now, with how much AI is growing, like I am leaning towards actually holding SMCI through earnings now, which I almost never do. Just because it's just like I am struggling with any reason to think like, even if there's like they're projecting some economic difficulties, I'm struggling with any reason to say like, well, why wouldn't they post exciting guidance too? Like, why wouldn't they also be guiding up, like maybe in a surprising way for Wall Street? But then we just kind of go right back to the end because I ended that way in an important way, in a surprising way to Wall Street. Who knows? Like, they could report up, they could guide up, but essentially, like, not guide up to the extent that Wall Street was already projecting as it went up, 40% in the last week, not going up as much as like they were projecting in terms of the ultimate profits and revenue. So that's really really tough, and why my ultimate strategy will be, I'm going to listen to earnings, I'm going to watch it like a hawk, um and then I'm going to, like, if I see like a sustained down, because sometimes it'll go down and up, you got to be patient. I'm going to cut and run with my, like, let's see, my live profit on SMCI. um it's a pretty penny. I don't know why this is being difficult in terms of, like, it's not letting me see my screen, whatever. That's very annoying. Um, oh, I think this could be the reason. I'm trying to get my live numbers on SMCI, and I think it's just, here we go. So right now I am up 42% on the market on SMCI, and that's like just a really good way to like think about trading. If my position was, say, only 10% up on the market, and I was worried it was going to be a win or a loss, I'd probably just take the win. But like, looking at it, it's like I have confidence I can get up, like I can get out if the like SMCI is down 10% after market, where it's like I'm confident I can just like get out, um if that does happen. But like, the upside is so much greater if they post good. Like, I could easily be up 30%. Um so that's why I'm holding it. But like, I hope that was helpful, Jonathan. And if there's anything to like put a cap on it, it's really just like, who knows is the answer. And don't trust anyone that tells you they know. Like, and like, to summarize my point, like, I normally don't touch earnings, but like, they're just in such a growth area of AI and they already guided up. It's just like, I kind of just like, and if the stock's up today, I'm just like, okay, I gotta like, I'd be really kicking myself if I didn't at least see how the market reacted to their earnings.
Yeah, we've been talking about SMCI for what seems like forever now, so it'll be interesting to see. Company Reacts, we got a comment, is going all cloud based. SMCI is a beast. So it seems like they're agreeing with you and what your thoughts are on SMCI.
Yeah, no, I mean, that's actually a great point on, like, the difference between like, um cloud, AI, semiconductors. There's all these little differentiators. But yeah, I would say, like, to the good point that luxury talk toy XXX, I don't know how much of that name to pronounce. We're just gonna say luxury. Uh the point that luxury brought up is a good one, where it's just like, when companies want to move like whole cloth into the cloud and get like a fast AI optimized setup, like SMCI as a business, is very well positioned to help them there. And like, unlike Nvidia, that's more of just like a mature business. They care, um, you know, they care. Nvidia cares much more about, like, hey, they're worried about, like, the Amazons and the Metas of the world and the massive GPU like data center contracts with them. SMCI is more like, they're going to give a better level of customer service to like a Reacts and still provide Nvidia chips, but like, ultimately might come in with like a higher level of service, higher level of customization, ultimately more hand holding that smaller organizations can need, even if ultimately they're getting deployed on NVIDIA chips. Um, and that's a big reason, like, that we love SMCI, because it is a company built on doing that kind of hand holding. And I don't know, Stephen, I'm gonna send you. I don't know how easy it is for you to post a picture, um, but like, I'll send it to you. There's a really good description of NVIDIA, um, like a picture of their business. And like, I don't know how easy it is to post one here, or like maybe you can do it later. Or actually, what I will do myself is I will post it, that Twitter thread that's there. Um, I'm actually going to post it to that Twitter thread, um, because I think it's a really, like, seeing the description of Nvidia's, I mean, sorry, SMCI's business. You're just like, whoa, like, how could that? Like, of course that company's going to grow.
Yeah, so for everybody that's here now, if you're on YouTube, you can scroll back up in the comments, and I posted the link to our Twitter up top. So if George posts that photo, you'll see it there. Because yeah, I don't think
And I'm
YouTube
gonna
allows.
direct link to the photo too, so you can do it, one way
Okay.
or the other. Um,
Yeah, so you guys will
but
find it. But I do want to circle back because I don't want to get this lost because it's going to make it a great short for people that follow our socials, TikTok, Instagram, YouTube Shorts. Watch out for this later in the week. But the state of college and professional sports is so weird right now in the business aspect of it because you have Brock Purdy, who's the QBs make the most money of any NFL position, who's leading his team to the Super Bowl, and his pay for this year was $870,000, which was lower than 16 college athletes because of the new NIL money that athletes are getting now, which just started a year or two ago. So I don't know. I've heard that a lot of college kids are now debating if they actually want to go pro or stay in college with the state of the business of sports. It's so crazy.
yeah. Sorry. Do you want to, like? Do you remember? You want to tell them what my senior thesis was on? I've described it to you a little bit, but like, yeah, I'm about to jump into that. But you can maybe give your shot at it. In college, I wrote like an 80-page thesis. Um,
I don't remember what your college senior
oh,
thesis was on.
Steven. All right, I'll do it in a second. Uh, I'm doing everything here, Steven. All right, I'm
But
posting the link to the tweet right now with like SMCI's business. Um, just in case you guys are wondering, it's annoying that you can't click those links. Um, but yes, I actually wrote my senior thesis in college on just like pro football and like the minor league, like college football, and basically like, yeah, how like I wrote a business plan for a new like minor league football where like kids would be like, college athletes would be paid because people make billions of dollars off them. Paid 3 years of education, get a college equivalency exam. Their third year they can actually just, they can actually like skip football the third year, so they basically play two. Third year they could just get the education if they want equivalency, and they're still paid a salary to do that and actually get a real education, because the problem at these colleges is a lot of them don't get educations, because like, and that's not even because they're not, people that want to like do school, like being a like almost pro athlete, especially in football, the training is like a full-time job, and it's not like realistic for them to actually be able to get educated. But the problems run much deeper than that, especially in the South, where players don't really get real educations, and they're allowed to like basically not really attend school and classes, and like, you know one of these one of the more interesting like and sad stories from my thesis that I read is like, there was I won't name the school, but there was a school that had a class called storytelling for children, and the only class element was that there was like, you go and read these college athletes would go and read a story to a kindergarten class, and one of them actually couldn't read, and that's the only reason the papers got wind of the story, and even then that was just a local paper. The news got silenced. So yeah, it's like one of those things that like, of course it got silenced, of course it's a major problem, and like, yeah, they like hide behind them being student athletes, but it's just like one of my source materials was called $40 million slaves, and like, yeah, it's this idea where it's just like, wait a second, like, you're making billions of dollars off these athletes, and like, you can't even, you're not paying them anything, and it's because they're getting school when some of them can't even like read, and you're not sending a lot of them to real classes. Like, that's bullshit. And like, a lot of it is like these underlying things where they actually, like, I think some of these schools um I would say especially certain ethnic backgrounds to look stupid, because it furthers the goals of like their, societal views. So like, holding back in education, to be clear, it happens like across all ethnicities. There's like, it's mainly like, I would say, like a socioeconomic thing where like, if you grow up in a place where like football is important, you don't really have to do much. They'll take care of a lot of your life for you and they won't make you get an education, which really only robs you. Um, but yeah, like there's this really funny thing in this story where like at one point I actually really loved the college football game growing up. I don't have time for those video games, but you'd like recruit, you do all this stuff. And the funny thing about that is at one point there was a lawsuit for the football game to be like, hey, these are definitely our likenesses. Um like, do you these are definitely our likenesses. Are we gonna get paid for this? And basically, instead of actually like paying people for the game in this like slippery slope where they're worried that it means that they'll have to pay college athletes other things, they actually just stopped making the game, which is hilarious. They're just like, okay, we might have to pay these people something. We're just gonna stop making the video game. So yeah, the NCAA, it's like it's pretty shitty. And the last thing that I will say about it is like because of these like recruiting things where you're getting under the table benefits and like obviously there's things like there's prostitution associations and like yeah at some of these colleges there's some basically like there are these seedy underbellies that do like under the table payments. Obviously like Reggie Bush was very open about like Cam Newton. Like these under the table payments are like a lot more prevalent and obvious than like a lot of people like are willing to admit sometimes. um but the other side to that is that like yeah you get things like um you know, Jerry Sandusky. Like, and you see the college like covering it up because they're very used to like covering up these payments and like there's this whole like black market underbelly that gets created. So it's not surprised when a cover up like Sandusky can happen for like all of those years because like these systems are being created where basically people are being exploited and colleges are making it is the crazy thing is like when you have these coaches like making 5x what the presidents of the school make while the players still make nothing. And you're just like, what? Okay, so the coaches are making 5 million, $10 million a year. The players are making nothing. And the colleges are making billions, and these people are paying more than any of the educators. It's like that to me was why it was an interesting thesis topic because like what's interesting to me is market inefficiencies. And like there's a very clear and I would say you know societal undertones of the way certain parts of our society, especially in certain uh conferences in certain distances from the Mason-Dixon line, that appear more comfortable with some of these systems on a government level um than others. And like yeah, just to be clear that it's not the college's fault that someone goes to their college or applies that can't read or didn't get the proper education or whatever. But it is the college's fault if they perpetuate that by giving them not real classes where they just have to read. Like it is the college's duty to educate, and that's where I like definitely think there's problems in these colleges where too many of their athletes are coming out not educated, and that's where I think the most blood is on the hands of the colleges, not even paying, like not paying the student athletes. It's that their student athletes don't get the same education or they don't ensure that they get the same education as the rest of their students. Um, and that's supposedly their payment. And that's where I have a problem.
Yeah, well, at least it's good to see that maybe the old way of doing it is starting to end with the players actually making some money, and there'll probably be more changes in the future because of the eyeballs that it's drawing and the amount of people that saw that there was a problem going on. We got a comment about natural gas is at its lows, and how do you feel about it?
Um, I think I can come up if you want to like if you're here next time on our Wednesday stream I'll come up with a longer answer because I never really like to go too off the cuff on this stuff. But I would say just with any like natural resources the U.S. has become a huge like net you know producer of like all of these natural resources, which is surprising. I saw a graph that was like shocking to me at one point in terms of how much this has moved. Um, so the only thing I'll say to that is that um, these things are very hard to predict, and I actually pretty categorically avoid stocks that are too dependent on things like natural gas prices or especially anything OPEC related because all of it's intertwined. And it's similar to how I talk about Chinese stocks. right? Where that's like a controlled economy where we have less information access than like the people there. So like I'm just like, well, it's not that I don't think any Chinese stocks are good. It's that I'd rather like use our metrics that are very well honed to laws that I understand better and systems that I understand better in the US. And I would say pretty much like anything involving gas or oil or anything like that is a very similar answer where it's just like there are variables that no one can control and no one really can get a great read on. So it becomes a real issue at that point of like my big thing, which is always just like lean on what you know. And that's what I always do. And that's one of the reasons I do so well on like trimming the newsletter picks and everything like that. Where it's like, as much as I do, as researched and like grown as an investor. And for those that don't know, I worked at my first hedge fund when I was 17. I've been a professional investor for a long time. But I'm still always shrinking problems and shrinking solutions to ensure that I am betting on what I know and avoiding what I don't. And like, yeah, that's like probably the most powerful thing that I can say to you is like I even largely avoid that stuff as much as I can because it's so hard to make good bets on that when there's so much information that we are not privy to and actively, I would say, actively not privy to. When it's something like OPEC, like I think it's really always good to think of like there are always people on two sides of a trade, right? And like the people in OPEC trade, they have sovereign wealth funds, they have like they have friendly hedge funds that they can leak information to. So why would you want to be on the other side of a trade, betting on the other side of the trade, the buyer when they're selling or the seller when they're buying, like when they have information that they don't have, and you could be basically betting against an OPEC bet, which is like if I put it in that way, you're still like, well, I'm still good with that. Like, yeah, you probably need to further your investment education more than I can give you.
So you don't like natural gas, and something tells me I just have this sneaky suspicion that you're not going to like the next stock that we talk about either. But we'll see. So Royal Caribbean, their biggest ship of all time, the largest cruise ship, most expensive to build. It cost $2 billion. It has a capacity of over 7,000 people, over 1,200 feet long. Its name is the Icon of the Seas. Just set sail. Um, so, what do you make of Royal Caribbean stock? Do you think this is going to boost the stock? Do you like investing in cruises? I know a lot of people have said that airlines is the worst business to invest in. So, something would tell me that cruise might be along similar lines as that. But let's see what you have to say. And what do you think of Royal Caribbean?
Yeah, I'm getting a live look at at what I would say like is going on with Royal Caribbean. I think all of the following things about that. The first is, as I always kind of tell people, is that it's just like value investing is about finding value. And sometimes, like, my first boss, like, actually told me, when I worked at my first hedge fund when I was 17, told me that his biggest win very intentionally was a garbage company. And it was like, I found value in it because it was a garbage company. Like, and it was like clear that it was being undervalued. So that is first to say, like, I don't like Caribbean's business. I don't like cruises. I think especially like sometimes you just have to think about things intellectually. And like for me, like everything that we saw in the pandemic, what happened with cruise lines, like whatever, like I already didn't really like the idea of being like trapped at sea or whatever. But like seeing that, like I think we can all just be like, hey, like even if you loved cruises, you probably are less inclined to go on a cruise after seeing that, or at least I hope you are like after seeing like the way they were stranded there. So that's thing one. Like thing two is like you can actually see if you go in the app right now, you can see that like, net option sentiment is like, going down a little bit. It's curving back up, but it's down from 80 to about 60 now. So that right there is like anytime you see something like a stock that was at like, consistently 80 net option sentiment that has been going down to like 60. You don't want that regardless of their business. And it's like, I always advise people, you have your macro view and then you have your specific view. So your macro view is that like if you don't think Royal Caribbean is like in a not good business, then I don't know what to tell you. They are in a not good business to be in because of that. Like yeah, that objective difference in their business model when you could see like what could go wrong for you on a cruise that a lot of people probably didn't anticipate. That is a new risk if you will. Um, so there's that. And then there's to recap that, there's like, objectively, you don't want to bet on that. But if you do think that the value is coming around, it might be something that you can bet on momentum because you can think that it could be value because it's been hit too hard. So that's when I start talking about like trend of net option sentiment. And we see, even last week it being up against 80, it's down to 60. So if you do see, if you think cruises are being hit too hard, and like you see that curving back up net option sentiment in our app back towards like the 70s or 80s, you might say, hey, this is a good time to play. It might be undervalued. Um, and I think that is the best way to kind of like look at everything. And I encourage anyone to just be like, hey, if you want to have a dialogue with me, you can always email George at Prospero.Ai. Ask me like, hey, is Royal Caribbean turning back around? I see an option sentiment. I'm always happy to answer questions about it. Come to the stream, ask about that. But that's how I look at it, right? Where it's just like three-step process. One, the macro view isn't good. So like you'd have to have like, you know, but that doesn't mean that there's not potential value. That's not supposed to like value and especially the play. So it's just like, okay, how do I determine that? Looking at things like net option sentiment trend, looking at things like upside breakout. Right now I think it's 50 upside breakout and 45 downside breakout. Even if there's not a good trend of net option sentiment, but if you see upside breakout going more to like 70 versus 50 or like 60 versus 40, get a nice like 20-point difference in those things. That might be the kind of momentum that also tells you there might be value to that play. But yeah, like I said, people have always found, email me, George at Prospero.ai. There's discounts on our paid products to be had, always. The big thing for me is I'm happy to give discounts if people are, to like willing to engage on an educational journey with me, and opening up that dialogue, always really good. I'll post my email one more time. Always happy to answer questions, give discounts to people that that want to go on an educational journey.
So the next story I think is just another tremendous example of the signals that you can find within Prospero. So I told you the story and you said, yeah, like iRobot has been in our signals for a long time. But today, Amazon, it came out that Amazon is terminating their deal to acquire iRobot. Seemed like it was over European, the Euro markets weren't going to allow it to happen, the regulators. But it's crazy because this came out today. iRobot has been in our short-term signals, bear signals for a while. They were down 15% on open. I think they came back a little bit and were down like 10% last time I looked. But I mean, if anybody has their phone available and you're watching this on a computer, I would recommend going in Prospero and looking at iRobot because the time series chart is just like amazing for this story that Prospero saw a week or two ago.
Yeah, I'm sorry. I'll actually disagree with you there, Stephen. Like, I could get people like a longer time series chart, but if you see it's kind of the opposite, like, we did see it going down, right? Before, um, before the news, right? It's at 30, it's at 20, it's like hitting it down. So we did predict it going down, right? Um, and I think even having a longer, so actually, you're right. Like, we were very, very low. Um, Before it. So actually, you're right. I'm just saying we did see it start curving up. So the real perfect example of the signals would actually, if we saw price start to curve up a lot more, then we would be ahead of the down and ahead of the up. But to your point, right? We did see like a high of like of 30 or like a lower lows. We saw a low on January 17th of 30. Then we saw on the 18th 20, and then we saw it even lower. Um, Five. We saw it. Sorry, we saw it at five. Um, but so we did see it get very low, and you're right, before it went down. But yeah, for the perfect example of the Prospero signals, we'd have to see it curving back up. But to your point, yes, we were ahead of this. We were ahead of the news. We frequently are because we always say that's the common sense thing about Prospero, right? We're looking at the options bets, and the prices especially, and the prices don't lie, right? So we're looking at those prices, basically people paying more for puts below where the stock is trading than calls above, and like our momentum forecast and everything. So as iRobot like drifted down further and further to the low end of our scale in that option sentiment, yeah, it became really clear that institutions were overwhelmingly betting against it before that news. And that's exactly what we designed it to do for you. Because, like, yes, institutions will move their options bets before the stock price moves. They just have to. That's how they make their money. And that's what we're delivering to you. And we just like that's how we do so well. Time and time again, we're just making that information really quick. We update every 3 minutes so we can get way ahead of even like put call ratio that is like an end of day formula, because it depends on open interest, not prices. Ours are in real time. We're right way too often. Like you can look at the app, see why we're right. You can actually see SPY non-option sentiment. If you're looking for a really cool time series graph of that, we're like super on top of like the run up last week. And like that's what we decided to do. It works really often to do it. And like you can um you can kind of see that on both sides, right? You can see it on the first side where you're basically just looking at something that says, oh, like we uh we see these graphs all the time. Net option sentiment, upside breakout, downside breakout, getting up ahead of news. And then obviously you see our performance. Another like stellar year to start off this year, 2 years before. Each year we were, above the market 50% or more above the S&P. And like last year that was on like, 150 investments. So that was on a lot of investments. We stayed consistent. We were right, over 60% of the time. Um, we can do that because this signal works that well, but like it works beyond what we highlight. It will help you with any of your investments. It can often help you get ahead of the market. That's why if you go to our website, you can see how good our user testimonials are. And there's tons more than that. Those are just the best ones that we put up there.
Yeah, so we cover AI, the AI space pretty in depth, being Prospero.Ai, and we have another cool story, cool or concerning, I don't know, it's up to you. But so the U.S. government is going to require Google and OpenAI to share, their latest and greatest AI models that they're developing with them, hand in hand. So it's kind of a bit of a forceful move here by the government that I'll let you give your take, but I don't know, who do we trust more, like the companies or the government with protection of these models? But you know, what do you make of this?
Well, it's kind of funny, and I obviously like joke to you about this, but it is kind of funny, because basically the joke is, and like where everybody knows it, is that like China's ahead of us on AI tech, and they're penetrating our systems all the time, partially because like our government systems, partially because of that AI tech. Um, and so for those that don't know, like a lot of times hacking is just like what's called like a brute force approach. And like before, like a brute force, like Russia's way was having like literally like rooms and rooms of like hackers that penetrated systems, and that was like one of the reasons they did so well because like Russia is very good throwing manpower at things. But now like brute force like penetration is like a lot of the times AI, like where it is AI, the best systems of like just like finding any way into these systems and doing it like an automatic like spyware kind of way, designing better spyware, click this, open this, and that's how like people get in if they're not actually already just like leaving back doors to systems that they already got in that we cannot track down. Um, but anyway, um, that's really funny to me where it's just like, what do you like? It's like, this is part of the problem, US government. Like, you don't really know how to govern these systems. You don't really like, there's a reason that you go to Google for robotics and now I'm sure open AI to like some things because like they're more advanced than you. So like way to go, like government. Like all you're doing with these sanctions is just like wrapping up like all of our best public and private technology in a nice bow for China to steal. And that's where it's just like the US government just does things that is just like, hey, maybe why don't you get a handle on like tech yourself instead of like these like stupid little like, like show basically like for show laws that pretend you're on top of it when you're really actually compromising our systems more by giving yourself access to something that used to be in three different places. OpenAI has their own security, Google has their own security, and you have your own security, which by the way I haven't heard about. It might have heard like, but I haven't heard China getting into like Google's AI systems or anything like that yet. But regardless, like anyone that knows anything about security will tell you that different stakeholders, like being responsible for the security, you're better off than like one stakeholder, especially one that we know has been hacked by China every which way. So it's like one of those things that just like, oh, good. Like, I'm glad you really care about like security. Like, when really like you're compromising us more. Sadly.
Yeah, and I didn't realize the US government could be that, forceful in like demanding tech. Like I thought business and the government were kind of supposed to be separated in a way where they couldn't just do that. It seems more something like how, like, out of China's playbook to do something like that. But I'd imagine it would have been happening whether like they release a public article or not, right? They're at
Before the
this level of scale.
even before the Patriot Act, the president, the Senate, there's like a lot of different governing bodies. I think even Homeland Security, just as an agency, is pretty broad. Like anything that's like for security, like the government has pretty broad access to demanding. Now, it would be interesting. I don't know how much. I imagine there's going to be some fight in court because, like, whether or not that's that's security. Um, yeah, luxury. We generally do 11 a.m. every Monday. Um, but we might like one of the things I was experimenting with this. We might go back to 11, see the difference in show times because I realize 11 a.m. might be a little early for West Coast people, so we might be missing an audience. So yeah, especially if you're here today and you would be able to come if we did more at 1 p.m. or even later, definitely let us know because we want to do these at times that are maximizing our viewership. Um, and similarly, if you're watching this after and you're just like, hey, I can normally come at 11, but I can't do it 1, please let us know. We're trying to optimize this.
Yep, feedback is appreciated. And we had a popular retail stock, which I'm sure we have at least a couple happy viewers here today. SoFi, they released earnings and they popped up. They were up over 20% when we started the stream. Um, I think the thing that made them pop so much is they were surprisingly profitable in the quarter. They were expected to lose like 5 cents, and they had 2 cents of EPS earnings. And I think what the Prospero signals are so cool for is that, after you have a stock like SoFi, which is a bit of a riskier stock, and it goes up 20%, you'd be inclined to maybe take profit if you're up or whatnot. But maybe we could look at SoFi in Prospero right now, and you could give your opinion on like how it looks even after this 20% move that it's had.
Yeah, of course. Let's get a live look. Um, let's
Let's
get a
get
live
some
look at
comments. Does
SoFi. And yeah,
anybody own SoFi stock that is a viewer right now?
I think Steven makes a great point. Um, and so yeah, you can actually see net option sentiment still looking pretty strong. But it was 74 midday, so it's down to 67. And if you actually look at its previous low in the last few days, like has been 70, 71. So, yeah, 67, it is looking lower right now. So that's my first read that it could be losing steam. But if I'm talking about okay, what levels, I would say if you see that touch below 60, that is a definite sell signal as far as I'm concerned, that this run has lost steam. But yeah, one of the things upside breakout obviously is heading up a lot. Like it started at 64 and now it's at 70, and downside breakout is heading down. So we are seeing some good fundamentals on it other than that, and that's the full way I would look at it. But yeah, I would watch that net option sentiment because to Steven's point, one of the things that Prospero does really well and that people have loved in the past is it goes beyond technicals. We've seen this with Meta. Meta's the perfect example. Meta's been at 100 upside breakout since it was trading at 200 last year. And some people have been just so many times it's been yeah, I see Meta's at 100, but it's up 50% already. Is it still good? Are you still confident? Technicals say it's overbought. And I'm just if you see it at 100 upside breakout, that's live. It means, the components of upside breakout, it means long-term options markets pricing are still bullish. It means analysts still buy ratings, price target above where it's trading. That has adjusted up, and price momentum factors that to have 100 upside breakout, you have to have all of those things very high. So yeah, that's a reason it works really well. And net option sentiment is similar in that in a different way, where it's looking at short-term options expirations and it's kind of netting out the demand for calls above where the stock is trading versus puts below where the stock is trading. So yeah, when you see that, you're getting a live look. But when you see SoFi starting the day at 72 net option sentiment, it's at 67. If it keeps going down to 60, as I'm saying, that's oh, that actually means people are starting to pay more for puts below where the stock is trading, or pay less for calls below where the stock is trading. And obviously, that should be a warning sign to people that are long. We're not there yet. Like, I would keep watching. Um, Personally, like how I look at these things is once I saw it go below 65, or even now, I might start like layering out of my long position, or at least hedging it with a bit of a short position too. Um, or buying some puts for insurance, etc. Especially if you're in the profit. Take a little profit out, buy some puts so you can actually even maybe see some short-term wins. If you like that. But if you're just like nervous, if but like yeah, like that's how I look at it. But I would say like right now it's like I would start thinking about selling very seriously and doing that if an option goes below 65. Um and then um beyond that, if I saw it go below 60, I would start to like really say like, okay, I really have to get out of a good portion of my position now. But that's just me. I'm just telling you how I look at things.
So, for a stock that makes a 20% move, would it be a natural regression for the net options or upside breakout to go down a little bit, or do you not? Is that not natural? Like, could it go up? Is it random depending on the case of the stock, or like because that logically to me it seems like natural that after it moves up, those would regress at least like a little bit.
So I do the Tesla case study like super often. But I think it's just gonna really help for me to pull that up. Um, because the answer is there's no rules, right? There's no rules to this, but it's very helpful. I'm gonna pull up. Uh, I'm gonna pull this up. I believe this is screen one. Yes. So people should be able to see. So like yeah, the first thing, and we review this all the time, so I'm just gonna be like super quick with it. Um, is that when I picked up Tesla, I even saw, basically the net option sentiment, like it was very volatile before. We see this higher low. I picked it up, and you see it like uh fixate on 100, which basically means the 2,000 stocks, like Tesla was just at the top. Which, if anyone watches net option sentiment, it's very hard to have like this is volatility we saw. Other than that, there was more volatility leading in. And we actually picked it up a second time because a user told us about this. But I pulled this up to illustrate a point that this is like, yes, to your question, like you do often see buy on the rumor, sell on the news. When you see Tesla in our very like comparatively ugly old interface, you actually see there was big news July 2nd. You see exactly that. The options bets completely changing at open, going down from like 100, almost 100 to 73 at open on July 3rd. And then you could actually see people filing into the long term options over the course of the rest of the week, basically taking those short term bets that were on the news events and then firing them in, like following them into long term bets. You could even see basically like what we're talking about, how good of a leading signal Tesla could be so often. But like, to answer your question, there is no one way that it interacts, but it is indicative, right? If you started to see like SoFi just like go from like a 72 net option sentiment right as this stock moves up more to like a 50, then yeah, people would be like, nope, that's all the juice there is. We don't care. We're going to start betting against it or we're getting out of our positions. What we're seeing right now is maybe like, yeah, I would say some people deciding there was enough juice in that trade and starting to like either make more bets against or pull out of their bets for. Um, but that's what we're talking about. Like, it's not super conclusive. It is indicative that some people are changing their bets, but basically exactly what I'm telling you. Like, yeah, you could see that in that Tesla example, people just very conclusively being like, nope, we don't care about short-term bets on Tesla as much, but we care more about long-term bets. Sometimes it's super conclusive. Sometimes it's like we don't care about short-term bets anymore, and we don't actually care about long-term bets. So you won't see that like filing up in upside breakout. The makeups are very different, but it is very always very indicative of what the market feels like in terms of their options bets. And to bring it back to SoFi and tie a nice little bow on this, because I do think it could be probably a good video, Stephen, um, is that what we're seeing in SoFi today is like I would say a slight softening of either desire to hold on to those long-term calls or more bets of puts against. They could be hedge bets with those puts. Just to be like, okay, we don't quite want to get out of our calls or our long positions, but we do want to take profit, make some put bets just to make sure that we are profiting if there's a big move in the other direction. So it's a little worry. I would call institutional options worry by by, on SoFi by institutions. Like what I guided you to in terms of, net option sentiment going below 65 is like, I would say, more conclusive worry. And look lower than 60 is like, I would say, pretty good evidence that there is concerted worry in the options markets. And that's when I'd advise to really change your positions around. So watch it in the app.
I think that makes a lot of sense, and I think it's good for people to hear that because it gives you a real good understanding of the Prospero signals and how to use them better going forward. But to wrap up our live stream in terms of our topics, there's a nice article I saw about our good friend Adam Aaron, the CEO of AMC. So his stock is not doing well, and I guess everybody who's a shareholder and everybody who's around the company, they expect him to like spend 100% of his time focused on righting the ship of AMC. So he had a tweet last week that I'll just read this one tweet quickly. This is from the CEO, Adam Aaron. So painful. 4 years after COVID, the industry-wide box office is still ludicrously anemic, and AMC stock has slid to 448. Difficult to think about anything other than guiding AMC back to in these challenging times. But greatness deserves praise. Sixers Joel Embiid, 70 points. And he had another tweet that was a week old. He had another tweet like yesterday, and he's kind of scapegoating again. He's like, AMC stock is bad, blah blah blah. But the Kansas City Chiefs and Patrick Mahomes. So it's funny because he wants to post about sports, but he knows he can't like do it without at least acknowledging AMC stock. Um, but I know you're good friends with Adam Aaron, George.
Yes, we're very, very tight. Actually, no. One thing that I will say, if you're a retail investor, that like just was like, oh God, this guy, like he did like one of my friends that like is on the hedge fund side, like he did say that Adam Aaron mocked. Obviously private source, whatever, take it or leave it, grain of salt. Did say he mocked the retail investors privately to him when they met, which is just seems absolutely par for the course to him. He seems like a very big, you know, eh, grifter, for lack of a better term. And like the whole time, and like what I have that's just like so annoying in what he just said is like he actually like is blaming his customers. Like, oh, like people aren't coming back to the theaters, like hasn't recovered or like whatever, which is just like, are you serious? Like that really pisses me off when it's just like, oh, it's the fault of your customers that you haven't made your product good enough that they want to come back to the theaters. Like that's totally your fault as the CEO of this company, you poor victim of your customers not coming to theaters. It's just like that is just like goddamn insane, like victim BS that I just like hate in today's world that he thinks people will actually accept because he does have a cult following that just like takes whatever he says. And I'm sure there's some people that are just like, yeah, it's our fault that we aren't going to movies and all you people that aren't like supporting AMC well enough, which is just like such a crock. It's just like angering. Um, but the other thing is like, yeah, like the amount that he has told people like that they should like hang in or whatever as he like is very aggressively diluting the stock, selling it to like private placements with Goldman Sachs, and other just like things that are just like shady at best as he like pretends like the business was going to turn around. Now it hasn't, and apparently it's the fault of the customers, which is rich. But that man is just like a like I can't believe him, and people have started to turn on him, and it's really sad. All the retail investors that have lost money, basically because they believe in him. Um, it's real sad. And then it's just like some whole other thing that, like, to your point, it's just like it is so like such a great summary of the problem that he knows how badly he's messed that up, and he can't even tweet about what he wants to about sports before first like realizing that he's gonna have to like scapegoat someone else for the problem without taking heat himself. It's just like that tells you how big of a mess he actually created. That it's just like before he can even post about basketball, he knows he has to like scapegoat someone new.
Yeah, it's a mess of a situation there at AMC. And but as we turn into the model portfolio, just a transition topic relating to the AMC story. Do you think if they had a CEO who was doing a good job, the stock would be doing much better, or is it just a lot of problems with the business?
I I would say like what I say to retail investors all the time is like I think he's doing a very mediocre job. People worship like, oh, Godfather, like he's doing a very mediocre job as a CEO. Like the one thing that you might say, like depending on your morals, he's doing like better or worse. Is I do think he's done a very good sales job of convincing retail investors that he's on their team and they should team up with him and he's going to make the company recover, even though like it is increasingly looking like bankruptcy is where it's going. Just my personal opinion. So that's where I kind of get really bothered, I would say. Um, but yeah, I think that um, it's possible they could get a CEO to do better, but like also like AMC is also a dying business. You're not going to get like an elite CEO to take that job, and that's just being like very realistic. And like I think what he did a little bit that I think he should have done more is figure out ways to like repurpose spaces, make them more event spaces, live streaming, esports, like that. I think would be a smarter way to transition the business that he didn't do. Um, that would be my one knock against him. Um, or even figuring out like a better way to capitalize the business that isn't just like getting this momentum and like diluting and like killing the momentum every time. Like maybe a way to do like more like I would say like non-dilutive private placements, like where like people aren't allowed to sell the shares and they don't like get hit in the same way, or like even private placements to retail investors that aren't going to sell. Like there's ways around um, the terrible dilution tactics that he's used, where I don't think he's gotten the best price for the stock. Time after time, went around his shareholders back when he did the ape thing. Like, just like the way he's handled it at various times is just like horrible. Um, but like that being said, it's a tough job, and I don't want to just be like, I don't want to say anything where it's just like, he didn't have a lot of good bullets in the gun to fire, so to speak, to use a bad metaphor. Um, but yes, I would say that I'm frustrated by the way he I think has like really it feels like in my opinion misled retail investors and caused a lot of them to lose money, and I'm a bit of a I'm very protective of retail investors, just like because I feel like we need more of that in this world. But yeah, I think I think that that's really tough.
Yeah, when you were naming all the businesses they should have spun into, it made me remember how they bought like a gold mine or whatever with the money that they did have, which nobody
Don't
understood
even
why they
get me
did.
started on that because I would like to do a little model portfolio stuff, but like that's just like the perfect example. And I will make it general for everyone, which is just like this, where it's just like you have a big problem in your business if you don't have exciting enough expenditures for it that you are spending on a gold mine. Like that tells me that you don't have any exciting like growth ideas for your business. Um, so yeah, that's a pretty damning thing of you as a CEO. Um, but let's do if nobody else has anything, like let's do the model portfolio anyway, because I do want to take a look at that right now. I will start sharing my screen in a second. Um, and we'll get any questions there, man. I feel dumb on Tesla. I should have like I don't know what I was thinking on that one. Um when I didn't when I was like, yeah, I added it to the model portfolio. Granted, like it's kind of like the reverse of what I said with SMCI, where it's just like, yeah, there's some risky stuff on on the upside there. But like at the end of the day, uh or on the upside and on the downside. But at the end of the day, like not having exposure to Tesla when it could like do really well is just like I don't think the best way. Oh, Apple's been like sneaking in. Yeah, we have some definite concerns. Let's take a look at KLAC on the technicals there. Oh yeah, we got to get the hell. Oh, it's coming back. Um, yeah. Okay, we actually have to stop because I'm ready for my next meeting. Um, but sorry, everyone. I will have, if you're waiting for the newsletter, I will have it come out. You just didn't get to see it live. But thanks for coming, everyone.
Yeah, and George, if you have to run, you can run, but I'm just gonna wrap it up. So if
I
you
gotta
are
go.
new today, yep, see you on Wednesday, George. I'm gonna wrap this up, everybody. If you are new here today, what we're about to get into is the model portfolio update, and George will go through his model portfolio and see what stocks he wants to add or drop. So you can come back 3 p.m. on Wednesday. We usually end the streams with them, but we'll definitely do it on Wednesday. So if you're interested in that and want to see it, come back to our live streams. We'll be live Wednesday at 3 p.m. Thank you for coming, and see you Wednesday. Happy trading and investing, everyone.